traders, Cousin Vinny coming to you from theclosingprint.com, April 18th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher, closing near all-time highs in the U.S. We had the Nikkei, the Bombay Stock Exchange, a bit weak, while the better opportunities in the international markets continue to be in Europe and emerging markets heading into the summer months. Big cap tech stocks rallied last week, as did value. We had Facebook, Netflix, Intel, and Qualcomm off modestly, while the bond stock ratio remains bullish for equities. Junk and high yield corporate debt are bullish to neutral, closing in the upper half of its sideways range. In addition, NYMO and NAMO are bullish. We did see the New York Stock Exchange advancing stocks beating out decliners and new highs beat out new lows. With 12 indicators bullish going into the week, 3 are neutral and 5 bearish, we would issue a word of caution to start the week and wait for institutions to tell us if they intend to push things higher or if we need a little breather into a very busy earnings week. Gold is bullish, telling us there could be a hedge. Started in the yellow metal, copper has been in a sideways range, and Brent and West Texas crude bullish for the first week after a 6-week retreat from highs. The CRB index is bullish. That's something we'll cover in a few minutes, but accounting for the strength in Europe and emerging markets, this looks pretty good for global economic recovery. Heat maps are improving. Most sectors were bullish in the U.S., with materials, real estate, consumer discretionary, consumer staples, and technology all outperforming last week. XLY-XLP ratio is bullish, and we had lagging sectors in the communications group thanks to Facebook and energy, with the latter starting to show natural gas with a double bottom potential change of trend. We'll look at a smaller list of IBD 50 names that look good. Stocks with rising profit estimates in green. Stocks in white are those that funds are buying, and the stocks in cyan are from the blue dot scan. Finally, we have Bulkowski with 5 of 5 of his signals green. CPI is bullish at 87.8 with 6 bearish patterns, 43 bullish patterns, and 256 patterns waiting for breakout. The S&P 500 closed above the 4100 support level, major gamma, with resistance now at 4190. VIX continues to drop, with the May OPEX filling in over the next 4 weeks. Bottom line, we feel a little bit overbought with the best opportunities in Europe and emerging markets for this week. The S&P 500 and spiders put in the best performance. We can see RSI is showing muscle. While some would view this as overbought, we can also look at it as strength of trend. While we do anticipate that we could see a pullback maybe to the 9 EMA or the 5 EMA, not shown, the support level is the previous resistance at 410 and 411. Or 4100 on the spiders, or 4100 on the S&P 500. Volume was above average, MACD is above its signal line, and stochastics is embedded. That said, we do note that the average true range or the intraday ranges have become smaller and smaller as this continues to drop. Because implied volatility is now compressed with VIX at new lows, the front month is lower than 3 months out. The potential for long-term volatility is being projected, and we can see that in this chart. In other words, this is telling us to be cautious and open to the idea we could see quick spikes in VIX. With that in mind, SPY puts are very cheap. We might consider some of those for a hedge going forward. While VIX did drop, there's also the possibility there could be some growth, and value stocks seeing some rotation. As we mentioned earlier, utilities and healthcare are outperforming, We also saw some money flowing into emerging markets and European ETFs. So there is a possibility that markets are just getting a bit extended. So it may be that we just need a little bit of consolidation and not necessarily a pullback. The S&P Equal Weight Index shows that potential for a respite in that the number of stocks trading above their 50-day moving average are near the red zone. Previous occasions where we've seen that was back in June, where we had that nice run up in the markets like we're seeing now. A little bit more extreme then, but we had a corresponding pullback back to the 50-day moving average when stocks got a little bit overbought, noted by the number of stocks trading above their 50 days. So it's something we need to pay attention to going into this week. A similar chart of the Nasdaq, which is at all-time highs, showed the number of stocks above their 50-day moving averages at 83%, closing for the week. However, it was in the red zone. Previous attempts to move higher after getting to this level, so the potential for a pullback is a bit more significant. The New York Stock Exchange also performed well, mirroring what we saw on the Nasdaq 100. However, this is 2,700 stocks, and we can see that we made 119 new highs, while the New York Stock Exchange advanced decline, clearly showing advancing stocks beating out decliners as the New York Stock Exchange continues to climb. So the best we can tell for now is that the markets continue to rise with no reason to panic. Just be cautious going into this week. The bond stock ratio remains bullish for equities as the red line drops. The 65 period weekly moving average is also turning over. Previous occasions we saw this in late 2016 into 2017 and only leveling off towards the end of the year of 2018 when Powell decided to raise interest rates prematurely, where we saw that spike in the bond ratio and also a subsequent drop in the markets. For now, looks very bullish as we trade at all-time highs. We also need to pay attention to the bond market since it is 2 times the size of the equity market. As COVID became more obvious, permeating the news, we saw bond traders get very nervous and started to see this 10-year spread start to widen. Right now, we're at lows below what we saw prior to COVID, telling us the bond market isn't worried about the current trend. However, there is the caveat that we can see 2, 3, 5% pullbacks and still be in a bullish trend without the bond market being concerned. That concern was elevated over the last 6 weeks or so. However, in the short term, we have started to pull back on the yields, which has affected banks. Those pulling back, in addition to earnings being better than expected, yields had more of an impact on the banks, whereas the Nasdaq and growth stocks continued to move higher. That said, the current trend in the 10-year yield is insignificant compared to where it's been over the last few decades. And prior to COVID, this looked like yields were starting to turn higher anyway in the face of rising inflation. As yields fade, so goes the US dollar. As a result, we've begun to see a bid in gold, threatening a potential trend break into this Kirby area where we could see a move up to 1840. So have a look at gold and the GDX and stocks like Newmont Mining for potential hedges and trades going into the summer months. If gold remains on a bid, together with copper, which has been consolidating for about 8 weeks, looking for a follow-through now with the strength in housing, construction. We're seeing a rise in commodity prices, which is reflected in the CRB index, this monthly trend that started in 2008. 13-year downtrend appears to be ready for a bullish breakout. The last time we had a global economic synchronized recovery was back in late 2015 into 2018. This time it appears to be much stronger, suggesting we can look other places besides the US for asset appreciation. All of these spider sectors are improving with the exception of energy. Some are a bit extended. There is a possibility we could pull back a bit, with the caveat being earnings. Forward guidance could suggest higher prices in the market, so that's something that we need to consider. International markets also look very strong. We can see many of them are moving above the 50-day moving average. As you can see with Argentina, emerging markets look good. If it gets above the 50-day, watch for a follow-through. Many of the South American countries, Brazil in particular, look very strong. Looking for a follow-through, as we can see. China is starting to improve with a 17% increase in GDP year over year after COVID impacted their economy. The Greek ETF, we've been in this one for 6 weeks, continues to thrust higher. Hang Seng looking a little stronger. India being the weakest in a bearish trend, along with Turkey, which looks like it could be changing direction coming out of this base. We do have a position in the Vanguard International Growth shares. This is reflective of global economies, the strongest of the bunch, as we see VWILX bouncing off of a support zone. Stochastics is oversold and turning, suggesting that we could see a retest of recent highs if international markets and global recovery resumes. Looking for IBD 50 stocks that are trading at or above the 9 and 21 day with stochastics oversold, or at a support zone where we could see a bounce like we can have with QFin 360 Finance, ABCB Bank, which would be interesting only if we see the 10-year yield starting to move higher again, and or if the banks start to catch a bid. Wayfair is sitting on the 50-day. Buyers did step up. RSI is flat at 50. Stochastics oversold, looking for a turn. MACD volume started to pick up on Friday. And while only a few stocks in the IBD 50 show stochastics oversold, most show the opposite, with strength in stochastics, strength of trend, MACD above its signal line, volume increasing, as we see with ASML. Semiconductors were relatively strong last week. Following through, price above the 9 and 21 day and RSI rising. HOME at home group, security, looking for a follow through above the 9 and 21 day, RSI above 50, volume increasing, MACD crossing, stochastics overbought, though it does look good for a potential follow through. B. Riley Financial also caught a bid last week. Gap and go, looking for a follow through. Volume was well above average and pretty obvious, MACD above its signal line, as the stock trades at 52-week highs. BioNTech, BNTX, many of you were mentioning this one last week. I'd be looking for a flag in a stock that could be setting up a high tight flag setup. RSI muscle, volume well above average, MACD above its signal line. Sam Adams and other stocks in this group, like Constellation Brands and Bud, all moved a lot higher last week. Celsius Holdings cruising right through the 9, 21, and 50-day over the last 2 weeks. The 50-day last week, RSI above 50 and rising. This looks like it's going to continue to rise and test 52-week highs. MACD is above its signal line. Stochastics showing strength. Real estate stocks like Century Communities. This one's been on the IBD 50 for the last few weeks. Looks like it's trying to break out on above average volume. MACD is turning higher. RSI above 50. Cleveland Cliffs and steel stocks look like they're trying to bounce as well. Cowen trying to trend and move higher. CrowdStrike, we have a position in, looking for a follow through. Note the wicks along the 50-day moving average Thursday and Friday. 9 EMA is crossing up through the 50-day this week. RSI rising. We've got above average volume, MACD above its signal line. Redfin, a company that provides support for the building industry, construction, reporting that it was the hottest March in history for the building group. Builders like DHI, D.R. Horton continue to move higher, breaking out of a sideways range on above average volume, RSI rising. Look for the builders continuing this trend. Etsy holding the 50-day, looking for a bounce. Consumer discretionary stocks doing well. Floor and Decor playing the trend in construction and builders. Above average volume. Looks like this is ready to break out. Generac Holdings been consolidating for the last 2 to 3 weeks. Looking for a follow through. RSI rising, volume starting to increase on Friday. Green Brick Partners been on the IBD 50 list for several weeks now. This is a builder with properties in Dallas and Atlanta markets, trading higher on above average volume, showing and suggesting institutions have been picking up shares. MACD above its signal line. Jefferies, another financial services group, looking for a follow through. RSI is rising, price above the 921 day, volume increasing, MACD crossing. Could see a pop this week. Logitech following through, looking for a retest of recent highs, moving above an area where there's no supply other than people that have traded up here. RSI is rising. LOVE looks like it's trying to break out of this sideways range. Volume starting to increase, MACD is above its signal line. MDC Holdings, another single-family home builder with great earnings, $8 per share, trending. Look for this to break out and follow through this week. Purple Innovations, an interesting company. It designs and manufactures cushions, pillows, and other products using its hyperelastic polymer technology. Good sales and earnings, increasing. Decent IBD numbers. It's got an 88 relative strength rating. And it looks like it's trying to break back up to 52-week highs, so that's a possibility this week. RSI rising. MACD above its signal line and volume increasing. Snap has been consolidating for the last week and a half. Above the 50-day moving average, RSI above 50. Watching this one going into earnings this week. Southern Copper could move if copper continues to break out, if we see the US dollar fading more this week. Stifel, another financial industry group name, looking for a follow through as these asset managers continue to push higher. Volume increasing, MACD has crossed, RSI is rising. Tempur-Pedic rising as well. Western Alliance Bancorp, nice pop on Friday on volume, following a beat. Previous year, March quarter, 83 cents reported, got 129% increase in earnings to $1.90 per share. So this is a good indication banks could continue higher. It's just about the 10-year yield. Some of these could buck the trend and just continue higher. Been consolidating since the first week of March. Additional stocks that funds are buying, watching RSI, in most cases rising above 50, showing strength of trend, with some of these stocks on the IBD 50 as well. Additional stocks with rising profit estimates as calculated by Investors Business Daily. We can see Dick's Sporting Goods from the consumer discretionary sector, which has been outperforming lately. In addition to Builders First Source. Polaris looking for a follow through. RH breaking out of a 2-week sideways range. In addition to Yeti following through in the consumer discretionary sector. PTC was added to the S&P 500 while Lattice Semiconductor and Progeny were added to the S&P Midcap 400. Consequently, we had a pop in Lattice Semiconductor last week as funds that have this particular stock need to add it to their lineup and buy shares accordingly. And finally, the FANG stocks, the 15 stocks that make up more than 55% of the weight of the Nasdaq 100, many of them extended following through, but nothing says that they need to sell off presently. All of these look pretty good. Looking for Tesla to bounce this week, along with continuation in Apple. Going into earnings, you got a 21-day, 50-day cross coming. Adobe, you had a cross 2 weeks ago. Amazon, same thing, looking for a follow-through. Broadcom, semiconductors looking for a breakout to 52-week highs. Cisco outperforming last week. Facebook was a sort of a dog last week, got a downgrade. Google trying to break out and continue higher. Watching for Intel to find more buyers, while Microsoft and Nvidia pressed higher last week. We're looking for a follow-through here, along with this nice setup on Qualcomm going into this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. This April the 18th, 2021. I'll send out a watch list later tonight around 11:30, 12 o'clock, midnight on the East Coast, 8:30 to 9 o'clock on the West Coast. So be sure to look for that in your inbox. Otherwise, get outside and enjoy the rest of your day. Take care, and I'll talk to you soon.